afternoon, everybody. It is David Cantrell filling in for Fred Arnold today at the Financial Hour here on KHTS AM 1220 and FM 98.1. Also on Facebook Live on their Facebook page and on the web at your hometown station. So again, for the thousands and thousands of people watching and listening, this is David Cantrell filling in for Fred. Fred Arnold had to take care of some business today, and so he said, "Hey, Dave, why don't you go do the show by yourself?" Fred, I've never done the show by myself. Oh, well, don't worry, Dave, you'll be fine. So that's where we are. So if at any time you hear us abruptly go to music and or some kind of traffic report, that means that I hit a wrong button or did something incorrect. So we're going to get things going. I'm going to give you a quick overview real quick, like we start with the market and how things are looking this week. And, you know, the stock market, pretty much just stayed in the same range as we were last week. I remember when we came on last week, it had that huge drop, and it's been working its way back. But one of a couple of important things that happened this week was the Federal Reserve came out and said that they are going to continue to buy everything they possibly can to keep our economy going. And what they really mean by that is they want to keep the stock market going. So they actually even came out and said they would be buying some corporate bonds. And what that does is it allows corporations to keep money flowing in their business, and then hopefully it will also reach out to the economy. So the economy did take it has been under a little bit of pressure because of the coronavirus. And always remember that, the stock market is looking out 3 and 4 and 6 and months out, or maybe even a year. And so it was very interesting to me that last week when the Fed said that they were going to keep interest rates low for 2 years. And I was thinking to myself, my goodness, what could happen in 2 years? But what they're doing is they're telling investors who, again, they're thinking out longer term than we are. They're thinking out, and even some of these bigger investors at these mutual funds are thinking, 5 and 10 and 20 years out. So when he makes a statement like that, like we're going to keep interest rates low for 2 years, what he's trying to tell the investors and the public is, hey, we're going to be here for you. We're going to make sure that the economy stays strong. We're going to do whatever we can to make sure that we don't have we're going to have a recession, but not as long as hopefully we can make it. So that's kind of what they're saying. Now, as far as interest rates, though, that is actually good for interest rates that they're going to stay low because the real estate market in this country is a huge and powerful part of the economy. And so one of the really good things going right now is because the housing market is still very strong right now. It's going to help bring the economy back and at least keep it where we need it to be for some time. So keeping interest rates low is great because it allows buyers to come into the market. It also, if you need to refinance and get some additional income that way, or, help you get over the hump, it's a way to do that. But also, prices haven't really dropped down that much, so sellers are pretty happy too. So, you hear about a buyer's market and a seller's market, and what I've been telling people is this is really a transactional market that, buyers are still pretty happy because interest rates are low. Sellers are still pretty happy because prices have not really started to come down very much. So we're in a really good place as far as real estate goes. And the one biggest problem with real estate around, and it's been a problem not just this year, but it's been a problem for many years, is inventory. That we're, severely underbuilt in this country right now as far as homes. I mean, I will tell you, I have 5 pre-approvals sitting on my desk for people looking for a home, and they just can't find one because the availability is not there right now. But, we're starting to see little bits of building going on even in our area and around. So we'll definitely, that will be taken care of, I think, in the next couple of years. We'll start to see that. And again, if we keep interest rates low for 2 years and we start building more, then I think we're going to be just fine. So the economic outlook is good. I understand that we're still going to have some pain for some people going through this coronavirus, and that's a terrible thing. And and hopefully we can get our hands around that quickly. There has been some good news on that front as well with that steroid drug that came out. It looks like it's going to be able to help people. So anyway, I think that for us, real estate market is going to stay strong, interest rates are going to stay low, and we're definitely, so that will help the recovery happen better, especially with the Fed providing that safety net below us. So we're definitely going to be in a good position. So with that, we are going to hop to a break here in a minute. We will, and we'll be coming back with one of our first guests is going to be Brianda Mack, who owns Moonshine Marketing, and she's going to give us some advice on how to market your business through the coronavirus and what we can do when we start coming out of it. So again, you're listening to AM 1220 and FM 98.1 KHTS, your hometown station, and we'll be back soon.